Gold prices open the week lower in about a $50 range, trading from 1900 all the way down to close to 1850, ending the session just north of that 1850 level, the lowest we've seen in gold prices since going back to February. Now, a lot going on this week and a lot happening in the markets. Clearly, the big event this week will be the FOMC meeting, where the Fed is expected to raise rates 50 basis points. And likely to extend those rate hikes moving forward in June and July, according to Fed Fund Futures. So rate hikes coming in waves. That right now having a negative effect on gold pricing. Likewise, we saw 10-year note treasury yields hit 3% today. So higher yields more attractive than non-yielding gold. And that's also putting pressure on gold. But really the big one is the dollar. The dollar index holding at 20-year highs. So higher, stronger dollar, higher yields, and a more aggressive Fed all combined to push gold prices lower again, down to just north of 1850 to its lowest since February. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that volatility is moving higher. Why wouldn't it? We got a central bank meeting this week. We've got treasury yields hitting yearly highs. We've got the dollar on 20-year highs. A lot of moving parts here and a lot of uncertainty. Volatility is moving higher in gold as prices have declined about 7% since the middle of April. Lastly, let's talk about positioning. What are the speculators doing? Well, prior to today's sell-off, we saw speculators exiting their longs again, something they've been doing really over the last month in preparation of likely is going to be a very aggressive Federal Reserve policy shift here in the near term. So speculators exiting those longs likely prompting a lot of the selling that we're seeing in gold. And will be interesting to see if that continues after this week's Fed meeting and heading into the June meeting next month. So gold prices starting the week off moving lower, down about 7% since the middle of April, ahead of this week's FOMC and a likely 50 basis point rate hike.